Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Wednesday, 16th day of August, 2017, and this is the Daily Report for Gold and Silver. Fed minutes were released this morning, and we saw gold trade up substantially as market participants and market analysts digested the news, which really came out with a much more dovish tone than was originally perceived. Gold, which had been trading $2 to $3 higher on the day, really began to take off. Gold ended up closing up a little bit over $9, $9.20 at $12.89.90. We did send out a special trade alert and effectively entered the market from a lower price point than it's currently trading at. And of course, we will cover that in detail as we pull up our technical charts. Silver also really flew off the handle, actually trading up about 40 cents, well over $17 again to close at $17.11. Now, we had a combination of a weak US dollar and traders bidding up both gold and silver today to give us our effective change. Dollar under pressure, down about 0.3% at 93.40. Equities markets managed to hold on to modest gains, with the Dow Jones Industrial Averaging managing to stay above 22,000 with a 25-point advance, closed at 22,024. Very interesting. NASDAQ up 11 points at 63.44, and Standard & Poor's up about 3.5 points at 24.68. So traders, what a difference a day make. The release of last month's FOMC minutes with a much more dovish tone and stance than previously perceived has absolutely bid up precious metals. Gold, silver, platinum, and palladium all trading sharply higher. Gold currently trading up about 0.6%, an $8 gain on the day. Basis December's futures contract is at $12.8770. This morning, just immediately following the release of those Fed minutes, when I saw them really bidding up gold and silver, I sent out a special trade alert recommending that subscribers initiate long positions in December gold contracts. Market was fast and trading at roughly $12.8370, up about $4 on the day. It is now up $8 on the day, or about a $4 gain from actually putting that trade on. Now, our stops are sitting just under $12.70. I want to put them below these recent lows that were achieved over the last couple of days. Low today and yesterday, roughly at $12.72, $12.73 in that area. So by putting it at or just below $12.70 should absolutely protect us in terms of the market running through a normal trading range during the day. You should now be long. As I said, call it 1284. That's going to be right in this area here. And the other thing that we can absolutely identify is a two-day pattern now of an engulfing bullish. We had an engulfing bearish followed by an engulfing bullish. That's a fairly rare occurrence to have these patterns alternate that quickly in time, but this market has absolutely been event-driven, and as such, the fact of the matter is that the perception that the Fed will raise interest rates this year has probably reduced greater than the 35% probability that was set into the market vis-a-vis the FedWatch tool put out by the CME. Now, as you know, I have been on record looking at support to be at roughly 1280. That's this mark here. We can absolutely see that this 23% retracement, again, this is a recent retracement that we put in because we had to have this high in place in order to do that. But the 23% retracement comes in at 1276, and if you look at where the market opened, it opened right above that. It had a low that was slightly below that by about $4, but for the better part of market activity during the day has remained above this particular price point. We'd like to see some follow through over the next couple of days and see if this market has the potential to have it bid up and actually break that elusive $1,300 per ounce. Because up until this point, and I'll have to compress this chart to get this in, up until this point, what we're looking at is absolutely a triple top in the market in which gold prices have been unable to sustain any kind of a move to 1,300 and, more importantly, break above that. And as you know, I believed that the third time would be the charm. That wasn't to be the case. We saw that as the market came down a few days ago after touching these highs right in here and then moving lower. You also know that I believe that 1280, that area, should be effective support, and I think that that is what we're seeing. As of now, because of this new fundamental news out there, I don't believe we will be challenging prices much lower than 1280. I certainly don't see the market going to 1262.50. So therefore, my recommendation is to maintain your current long position and to maintain your current stop. So traders, one of the net effects of today's FOMC minutes being released was some downside pressure in the US dollar. When we talked about gold prices being up $10 in the spot market in our opening letter, we also realized that it was split between traders bidding up the precious yellow metal along with a weaker US dollar. Dollar right now down about 0.4%, giving up all of yesterday's gains. And if you recall from previous shows, what I've really been anticipating as this market moved up, and I spoke about this, I believe, on the weekend review, was the fact that we're probably going to witness some sort of a dead cat bounce. In other words, the market is traded up to effectively 94 at the high. It's currently trading at 93.41. I would expect a drop, and a drop to approximately 92. That has been my target over time. But I've also revised my target with this new fib retracement, and in order to actually find the lows on this retracement, I had to go back in time and find a series of tops, because what happens when we look at this in terms of a weekly chart, I'm going to go ahead and blow that up. What happens is that there is really no technical area to place the bottom or start point from a fib retracement, considering that once we broke these particular lows at 92, and this of course was back, this being 2016, this being 2017, but when we broke down these lows in 15 and 16, we really hit lows that we haven't seen since about 2014, when the market was really tracking at about 80 and had this tremendous surge to the upside. So to fix a low to make some sort of sense out of this most recent move, I've fixed the lows to this triple top that occurred starting in 2009, going all the way to approximately 2011. I do believe that there's more downside in the US dollar. Equities, though, are holding up fairly well. I would expect sideways moves in US equities, lower pricing in the dollar index. Traders, effectively, the trade that we put on today actually was triggered earlier than I thought. I thought we would see a little bit more downside pressure than we actually did, but the bottom line is this market moves based upon events, and the event-driven market that we're looking at, with these minutes being released and really changing the landscape of perception in terms of the Fed itself, I believe will continue to be supportive of gold. And I believe we could see another run or test of 1,300, and hopefully this time we'll actually be able to break above it. My upside target right now is 1319, and that's if we see the market have the momentum to continue to be bid up and trade above 1,300. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.